What is up, everybody? Welcome back to the Crypto Sherpa Show, where I cover the latest cryptocurrency news articles to keep you informed on what's happening in the crypto space. And sorry for no episode yesterday, it was a busy day, and then I think eventually there was not so much news. So it's like, okay, once they got past the point of like going, I'm not going to be on time for my show, it's like, you know what? It's okay. We can save the news for tomorrow, and we're back. So I hope everyone's having a good week and looking forward to the weekend. I know I am. Time to get a little siesta, maybe go get some sun. It's a warm day right now in Florida, so I'm going to take advantage of that because once Sunday hits, temperatures are going to go down, which I'm sure a lot of northern areas in the United States is getting quite frozen now, and there are some crypto miners preparing for that to shut down to embrace it. That's going to be one of our articles today, as well as we are at the point of no return for Bitcoin and crypto adoption. That was discussion by the Big Four. I think they're talking about the Big Four banks. We'll find out together, and more news. But what's going on with Bitcoin's price right now? Let's find out. We are currently at $89,900. So we are kind of hovering between 88 and 90. So yeah, we're just bouncing around from there right now. And that's what I expect. I don't expect any big movements. Nothing really in the news is pushing for that. People are still kind of fearful in the news. So it's our fear territory is at 34, so we're out of neutral. People are feeling not so right, and we kind of see that. I love using Bull Mania's charts on Ivan on Tech's channel, where we can see the fear and greed index chart wise. And we can see when people were fearful, how the price got reacted to it, versus the green territory where we're greedy and how long it lasted. So we're just if the 4-year cycle continues, we are literally going to go down for maybe a year. But there's also so many other charts. If you look at the track record right now, we're just waiting for signals if they're going to be a bull run, which is a 200-week moving average, or above the 50-week moving average. So we can play around with that. But as right now, we're fear territory, so that just kind of shows us that the price is going to go just a little bit down until something changes. But what is happening in the news, though, today? Let's go cover some Twitter news articles first. Just in, Ledger plans New York IPO with potential valuation over $4 billion, and they are working with Goldman Sachs, Jefferies, and Barclays, and they're listing that could happen this year per FT. Wait, FT? Who is FT? I don't know. But yeah, so Ledger is going to be getting on the stock exchange with an IPO, and is that bullish news? I think it kind of is, because, I don't trust the Ledger company unless it's me out there. But again, they still create self-custody crypto wallets out there, and it's always important you choose the right one. But now you're going to be investing in companies that promote self-custody. And again, Ledger, I'm not a fan of it. And just to be aware that if you bought a Ledger device on their network or their website, there was a third-party hack that happened last week, so some emails got exposed. Your private keys and everything are still safe, but just be aware, since your emails were exposed, you may experience some phishing attack scams out there. So I'm just going to keep reiterating that until it kind of dies down and we get the clear picture of it. But yeah, so if you get anything from Ledger, just automatically assume it's a scam, because we had that attack that happened last week. So that's what's going on with Ledger, though. New York IPO. What else? We have UBS plans to offer crypto trading to its wealthy clients through its Swiss private banking arm. So again, like I said, we're at the point of no return. It's Bitcoin will either go to 0 or a million, like Sailor said. But I don't think it's going to go to 0 anymore. Also in the news, we have Binance officially applied for the MiCA in Greece. So yeah, Binance has applied for a pan-European MiC license in Greece, with an ESMA data showing that Greece has still yet to issue any MiC or CASP license yet. So we'll see if Binance gets that as they continue to expand across the world. And let's see, we're just going to tackle through these new Twitter news articles that just didn't have articles to them, but from Bitcoin News, the SEC and CFTC announced a joint event happening on January 27th to discuss crypto regulation and harmonization. Chairman Paul Atkins and Michael Selig will focus on aligning efforts to make the U.S. the global crypto leader. So this might be some kind of news. I don't know if it's bullish or if it's bearish. I just know as we get closer to January 27th, people are either going to be buying the news or selling it. So price can swing in any way from this, and we'll see what they come up with. We already knew we needed some discussions on the Market Clarity Act to really consider who's going to have control and stuff. But yeah, so we'll see how this turns out, and I'll definitely keep you informed on it. And lastly, in the Twitter news, we got Coinbase announcing a new quantum computing advisory board. This board will published position papers on the state of quantum computing, issue guidance to users, developers, and institutions, and respond in real time to major quantum breakthroughs. So, yeah, that quantum threat that people are always so worried about, it's like we can use quantum computing to fight back and stay safe. So Coinbase is doing that just to stay up to date and on top of it, getting live action reports on the development of quantum computing out there. So that's been pretty interesting to see how that plays out. But that's all the Twitter news out there. Our fear and greed index, where people are feeling fearful. And again, that's always when people are fearful, that's a great time to buy. But let's talk about the point of no return for blockchain right now, or Bitcoin as it is. So this article is coming from Decrypt from the Morning Minute. And the PwC says crypto adoption has passed the point of no return. The big four firms argues in the latest report that institutional adoption has permitted crypto so much that there's no turning back now. So that is awesome news. Now let's go through this article to hear a little bit more about it. So one of the biggest concerns of crypto under the Trump presidency has been what happens if the political winds shift in 2026 or 2028. Well, PwC says that you have nothing to worry about. Because what just happened? According to the PwC, institutional adoption of crypto has crossed a threshold where it is no longer reversible, marking a structure shift in how large financial players interact with digital assets. Now, the PwC assessment points to sustained engagement across custody trading, settlement of tokenization, and on-chain financial infrastructure, even through periods of market volatility and regulatory uncertainty. Now, rather than institutions testing crypto on the margins, PwC says that the firms are now building long-term strategies and systems around it, making a full retreat of impractical even if market conditions deteriorate. So if we get into fearful territories, volatility increases, it's just like there's no retreat from this anymore. Now, why does this matter? It matters because the signal here is not just what PwC said in a report, it is that the PwC is saying it all. A big four accounting firm weighing in on crypto adoption carries a different kind of weight than just a commenter from exchanges, venture firms, or even protocol founders. Now, they weren't issuing reports like this in 2021. Now, more big TradeFi players are paying attention and publishing thought leadership on crypto. As for the substance of the report, it also speaks directly to one of the biggest lingering concerns around crypto, and that's the idea that a political shift in 2028 could unwind the progress made over the past 2 years. Well, the PwC's assessment suggests the opposite. Once institutions commit to crypto and everything that goes with it, custody systems, compliance frameworks, tokenization of products, on-chain settlement infrastructures, etc., walking them away just becomes too expensive to do so. So these are a multi-year investment that embedded in core business processes now, not experiments that can be just flipped off with a change in administration. So we may actually be making enough progress right now to set crypto up for decades, and the biggest players are finally taking notice. Now, a couple of macro and crypto market updates with data. We're getting headlines that stood out, like crypto majors are red, while gold nears 5,000. Silver closes in $100, and oh yeah, that was crazy. Silver at 100. I know I saw it on this site. No, it was this one over here. What was it? Global asset ranking. So yeah, $100 right now for one silver ounce. So woo, that's pretty nice. I think I got a little troy ounce right here. This little bad boy. This guy used to be like $40, like not too long ago, but now this is valued at $100 1 ounce. So this is pretty awesome. Remember there was like a video like a couple of years ago of a guy trying to give away 10 ounces of silver bars or chocolate at the corner of a restaurant, and everybody chose chocolate. If they took that, that would have been $1,000 they were just sitting on. So yeah, it's like holding Bitcoin, even holding precious metals. These are solid assets out there that everybody should be at least stocking and holding in their own private savings account, not in the bank's custody, but your own. So that's why I love these three assets out there. You can actually self-custody it, and it's in your control. You don't have to trust a bank to hold on to it. So yeah, so that's pretty cool news, and that's what's going on. And what was else going on with these little datas? Let's see. Ledger is preparing for. Yep, we talked about that. Ripple CEO Brad Garlinghouse predicted crypto could hit new highs in 2026. Everyone's saying that. Trump sued JP Morgan, for $5 billion, allegedly for politically motivated debanking. So I don't think that's really crypto related, but we do know JP Morgan and Chase Bank has been known for closing crypto people's bank accounts. They did it to me, so looks like Trump's going out. Maybe that would kind of ease off on the debanking aspect. Let's see, BitGo briefly surged in stock market debut, and BlackRock Larry Fink gets pushed the idea of a single blockchain for tokens to avoid corruption. So yeah, so in corporate treasuries, this is all little micro news out there. But yeah, we are at the point of no return because again, even if there was a change politically wise, it's too expensive for businesses and corporates just to turn it off. So this is bullish news for the future of Bitcoin and crypto. Now let's continue on. I didn't mention that it is getting quite cold. I was going to enjoy my weekend here because it's still warm here in sunny Sarasota, Florida. And yeah, it's about to get cold next week. But a lot of Bitcoin miners are bracing for the storm because we've seen this happen in Texas too, where they prepared for it because they're going to utilize this excess energy that by shutting them down can be now used to go to homes and houses. That way there's less instability in the grid out there. So let's cover this article about them bracing for this major ice storm literally hitting now. But Bitcoin miners have powered down to ease the load on the grid in the past, such as in 2022 when Texas miners curtailed their activities amid a major winter storm. Now, a winter storm threatening to pelt most of the southern U.S. with ice and heavy snow this weekend could see Bitcoin miners curtail their operations until the front has passed. Now, American weather forecasting company AccuWeather reported on Thursday that a massive winter storm could extend for 1,800 miles from far west Texas to mid-Atlantic coast, cutting power, preventing travel in over a dozen states and affecting upwards of 60 million people. Now, when large storms have caused havoc to power grids in the past, Bitcoin miners have powered down to ease load on the grid. In 2022, when a major winter storm hit Texas, crypto miners across the state voluntarily curtailed their activity. So they just shut down their miners for a bit of time just for the storm to pass. Now, Daniel Batten, a Bitcoin environmental, social, and governance researcher, told Cointelegraph that miners will likely do the same thing. I think with extreme weather events becoming more common in jurisdictions throughout the world, the need for Bitcoin mining load balancing, particularly as more as solar and wind go onto grids, is only going to increase, he added. Now here's AccuWeather's prediction for the storm and how it will affect tens of millions of people, likely to result in power outages across multiple U.S. states. So yeah, from western Texas going all the way, let's see, definitely is that Mississippi and Alabama, and then it's kind of skipping Florida, but we are getting some of that cold weather in. And then it hits Georgia, Charlotte, now. So yeah, anywhere these areas for like crypto mining, they were most likely voluntarily shut them down. But it's also a good thing to do because I think I experienced this or heard about this. It's like there was miners that got hit with a cold front, and then the outside froze the entire outside system or the ventilation. So there was no circular ventilation going on, and these miners run so much heat. And so what happened was, since they weren't being cooled down, they kind of burnt out. And then next thing you know, you got to replace those mining machine units. So shutting down during cold times is actually also a precautionary thing to do when you're a Bitcoin miner, because again, in case that happened and then your miner's overheated, you got to replace those parts. So this kind of saves money too in that way. So it's two things: you're helping stabilize the energy grid and you're protecting your miners for just to be able to last a lot longer. But let's continue on with this article. So Bitcoin miners can help stabilize power grids through load balancing by acting as a fast controllable demand response. Now, miners set up near wind or solar installations and ramp up to soak up surplus power and shut down when the grid tightens. Now, a Tuesday report from the Digital Asset Research Institute suggested that Bitcoin mining has saved Texas around $18 billion by eliminating the need for new gas peaker plants. Now, BitDeer doesn't expect the storm to shut it down, so there are going to be some miner companies out there continuing on their process. Now, Singapore-based miner BitDeer, which operates over 293,000 rigs globally, including in Texas and other U.S. locations, told Cointelegraph that it doesn't anticipate the storm causing a huge disruption to its rigs. Now, storms typically do not directly impact our operations. We have standard operating procedures as the season changes, such as winterizing the pipes. The site team monitors the weather situation, and so they are responsive, a BitDeer spokesperson said. Now, the spokesperson added that the Electric Reliability Council of Texas considers Bitcoin miners large flexible loads, meaning they can curtail their electricity usage on request, unlike other industrial electricity users with firm electrical demand. Now, BitDeer stands ready to fully support the grid should supply constraints occurs, that they said. So they are fully on board with it. Now, U.S. miners control the largest share of hash rate, so that's a positive sign for us Americans. Miners are the backbone of the Bitcoin network. They validate and record all Bitcoin transactions into new blocks. Now, the more miners participate, the higher the hash rate, which helps secure the network. So the US is home to a large chunk of the world's mining power, with Bitcoin mining data platform's hash rate index estimating that the country controls nearly 38% of the global hash rate. Now, some of the largest miners in the US include Marathon Digital Holdings and Riot Platforms. Now, here's that chart of countries showing market share and usually their hash rate. So US is definitely number one with 37.8, Russia is at 15.5, and China is at 14.1. And those are the top three players for market sharing of the hash rate out there. But then there's still, again, the rest of the world still mining as well. Paraguay, United Arab, Oman, Canaan, and Kazakhstan. So there are also a large number of facilities in the U.S., and the Federal Energy Information Administration found in 2024 that there were upwards of 137 crypto mining facilities in the U.S., with the largest concentration in Texas, Georgia, and New York. So that's the Texas, Georgia, and New York. Let's look at that map again of the weather. So where are we hitting? Yep, Texas, Georgia, and New York. So they're getting the snowy part, while Texas is just getting green, and Georgia, Georgia's getting ice and snow. So we'll see if New York and Georgia, but Texas, that's a maybe. They might get some text depending on where those miners are located. But yeah, so miners are expected to just brace for impact. Again, it's both strategic and it's also a safe thing to do because, again, you want to look after the people of your town because a lot of people will go with no power if the storm hits just right. And thank goodness for Bitcoin taking so much energy that we can just shut it down, let that energy be used elsewhere. And then once the storm's done, flip those miners back on. Boom. It's joining back into increasing and securing the Bitcoin network. So I love it. So that's our Bitcoin mining news and everything. Let's continue on. What else we got? Looks like Kansas introduces bill to establish a strategic Bitcoin reserve. So did they do this one yet? Or is this a new one, a refurbished? Let's find out together. So Kansas appears to be the latest U.S. state to consider a formal role for a Bitcoin in public finance, with lawmakers introducing a bill to create a state-managed Bitcoin and digital asset reserve. So Kansas has become the latest U.S. state to explore a formal role for Bitcoin and digital assets in a public finance, with lawmakers introducing legislation that would create a state-managed Bitcoin and digital asset reserve fund. Now, the bill introduced by the state senator Craig Bowser proposes amending Kansas and the unclaimed property laws to explicitly recognize digital assets, including cryptocurrencies and virtual currencies, and to establish a framework for their custody, management, and potential sales. Now, if passed, the legislation would place oversight of the reserve at Kansas State Treasurer, and under the proposal, unclaimed digital assets like Bitcoin would be transferred to the state after 3 years of inactivity, followed by undeliverable written or electronic communication to the owner. Now, there is some ambiguity around what an unclaimed digital asset is, but the bill appears to apply only to custodial digital assets held by a legally defined holder, such as exchanges, banks, trust companies, or other licensed custodians, not to self-custody wallets, because nobody has access to a self-custody wallet unless you own the private key to it. So the reversal of that type of thing, I think we're seeing it in California too, where they did that. I think theirs is 5 years, or is it 3 as well? I forgot, but they're doing the same thing where if it's untouched, then the controllers get to own it. And so this only applies to exchanges, banks, and trusted companies out there for custodying your cryptocurrencies, not self-custody. Now, per the bill, the 3-year abandonment clock begins only after written or electronic communication to the owner is returned as undeliverable, and it stops immediately if the owner shows any sign of activity, including logging in or accessing another account with the same custodian. So unlike many traditional forms of unclaimed property, the bill allows these assets to be delivered and held in their native digital form, rather than being immediately liquidated. Now, the legislation also permits the state-designed qualified custodian to stake digital assets and receive airdrops, subject to direction from the treasurer. Now, any staking rewards or airdrop assets generated after 3 years would be transferred into the Bitcoin and Digital Asset Reserve Fund, now creating a mechanism for the state to accumulate digital assets over time. Now, in a notable provision, the bill prohibits BTC from being deposited into the state's general fund. Instead, Kansas would retain Bitcoin as part of its reserve, while directing 10% of deposits of non-Bitcoin digital assets into the general fund. Now, the contingent on the legislative appropriations, supporters argue that this structure treats Bitcoin as a long-term reserve asset rather than a short-term revenue source. Now, here is Bitcoin Magazine's tweet on breaking. Kansas Senator Craig Bowser introduces a bill to create a strategic Bitcoin reserve. I wonder how many states this is now. Like it's growing, and I love seeing it happen more this year. But states are actively pushing for Bitcoin Reserve. The bill also lays out how the state would handle the sales of digital assets, cryptocurrencies that trade on established exchanges, and would have to be sold at market prices, while assets without active exchange listings could be sold using other commercially reasonable methods. Now, the goal of all of this is to minimize market disruption while adding clearer guardrails around how state-held digital assets are managed. Now, if passed, the legislation would put Kansas alongside a growing number of U.S. states exploring how Bitcoin and other digital assets might fit into the long-term financial custodial strategy. In recent years, state lawmakers across the country have debated whether Bitcoin could serve as a hedge against inflation, a diversification tool, or just a way to modernize public financial infrastructure. So they have always been considering and looking into it, debating on it. Is it good? Is it bad? And we're finally at that point where it's like where they think it's bad is not happening anymore. So I love how adoptions continue to grow. I hope this bill gets passed, and I hope to see even more states, eventually all 50, have their own strategic Bitcoin reserve. So that's our Kansas, and is that all of our Bitcoin news I really have for you? Yep, that's really all the Bitcoin news I have for you. But let's move on to our final news article today. It's Friday. On Capital One, bank buys stablecoin fintech Brex for $5.15 billion. What's in your wallet? I do have a Capital One card. That was like the only one they could give me when I was 18 years old, and I needed to sign up for a phone plan. So seeing Capital One get into the stablecoin market, or they've already been in it, but it looks like they're adding on by buying this company to acquire some. So let's go through this article to hear a little bit more about this transition. So Capital One's acquisition of Brex comes just months after the payment company launched support for stablecoins. So major U.S. bank Capital One has struck a $5.15 billion deal to buy fintech Brex and is set to acquire the company's stablecoin payment solution. Now, Capital One said on Thursday that the deal is a combination of stock and cash transactions and is expected to close in mid-2026. Now, since our founding, we set out to build a payments company at the frontier of the technology revolution, said the Capital One's founder and CEO, Richard Fairbank. Now, acquiring Brex accelerates this journey, especially in the business payments marketplace. The deal is one of the largest fintech acquisitions in recent years and is set to fold the stablecoin-friendly startup into one of the largest financial institutions in the U.S. as traditional finance is seeking ways to break into crypto. Now, a potential move into stablecoins in October, Brex announced it would become the first global corporate card provider to offer native stablecoin payments, starting with USDC. Now, Brex founder and CEO Pedro Franceschi wrote on X that he would continue to lead the company, and the two firms would be able to move faster, invest more deeply, and bring more powerful capabilities to businesses than either of us could alone. Now, this story is about growth acceleration and two founder-led companies coming together to bring a better way to manage money to millions of businesses in the mainstream U.S. economy who are dramatically underserved by the traditional banks, he added. Now, stablecoins have become a hot topic in TradeFi circles since Congress passed key regulations for their tokens last year. We have the stablecoin market capitalization has increased by 18.6% to a record $314 billion since the passage of the Genius Act last July of 2025. And yeah, here's a chart showing stablecoins have been seeing sustained growth while other crypto sectors have declined. And let's see, what are these sources? Let's see, this is the stablecoin one. What's orange? Exchange-based tokens. Oh, yeah, that's why my portfolio is down 60% on those ones. Decentralized finance. Oh, wait, that's the one I invested in. Oh, yeah, so that one makes more sense. And then meme tokens, gaming. So yeah, out of all the tokens out there, gaming, memes, real world assets, stablecoins have dominated this year for adoption wise. And again, we got bills around it. So of course it increased it. And we're just getting more clarity too. And again, speaking of the clarity, as I mentioned earlier, got delayed because it favored the banks rather than crypto. So if the exchange had a stable coin, they couldn't provide yields to it. Like, oh, you earn 4% by holding the stable coin on our platform for X amount of time. So banks didn't want that. They changed that. It's like only we're allowed to do it. And that's why we have a delay on the Clarity Act. But they're working through it. They're talking. And does this kind of have to do with the which one was it? This one right here, SEC and CFTC hold joint event. So we'll see what they discuss over there, and hopefully the Clarity Act does progress a little bit further. But that's it for the news today. Again, our fear and greed index is currently at 34% at 34. Let's see. Bitcoin's price is still at 90,000. We're just holding. Let's take a look at the week chart. Oh yeah, week chart, that makes sense. I kind of forgot we're at 94,000. Let's zoom out even more. When in doubt, zoom out. So yeah, I hope Bitcoin can do another rally up to 97 to 100, but we just need some big event to really take that place. Otherwise, it's in a bearish territory, and I expect maybe a little bit more dip, which I hope not, because I just bought back in. So everyone, I hope everyone has an awesome weekend today. Stay safe out there. Be alert. Don't forget to hit that like and subscribe on wherever you're watching, YouTube, Rumble, Twitter, TikTok, wherever. Just hit that like for me. Helps with the algorithm. But everyone have an awesome weekend, and I will see you again next week with some more crypto news. Peace out. Love you guys.